I'm sorry about that. I just realized after recording this that the screen share was locked on the Webull screen, so you guys couldn't see the actual positions here. So here's the recap that I was referring to. Feel free to screenshot this, and when the video starts up, you guys will have it as a reference, because I kind of went a little bit crazy in this video. I'll see you guys later. Thank you, and goodbye. We're on day two. Day two of speculating with StocksBuddy. What's up, everybody? This is Pookie's Revenge. We're back with another 5-year, $500 episode of the Rags to Riches series. And so today I started, yesterday I started trading with StocksBuddy just on speculation. I cleared out all the extra stuff from the portfolio. There's no more special dividend holdings. I've finished demonstrating them. I'm going to move into the speculative stuff with some day trading. Obviously on small allocations, I'm going to rotate a third of my speculative amount every day. And for this particular portion of it, I'm just going to use StocksBuddy because it's visual, it's easy, and it's got the adaptive stop loss, which helps me personally because I have to focus on other stuff throughout the day. So very, very easy to use, but you don't have to use StocksBuddy. You can do this with other indicator pairs, like you can do like EMA cross-ups, you can use the super trend, you can use parabolic SIR, you can use the alligator if you want. It really doesn't matter what you choose. I just personally prefer that one. This is not a product pitch or any of that stuff, so let me get my face out of the way and we'll dive right into the stuff. All right, so first off, I'm going to pull this up because this is the recap. So yesterday, Monday, I traded BIG, I traded BMR, and I traded DHAI and Wish. So these are the four that I pulled up and I walked the members through in the stock chat channel in the premium side of PB. But again, this is like, you don't have to be in there either. And again, this is only for my speculative allocation. So 70% of my money that I've contributed is tied up in investments, or 70% or more for the dividend and passive growth stuff. And then what's left is what I'm using for this. So I'm just taking a third of it, chopping it up and putting it into small trades throughout the day with a 1-to-2 risk reward ratio using specific configurations of signals. So with that said, traded these four tickers. First trade on BIG. Let me just go back here in time. So yesterday I used the 15 and the 2 minute, and what that means is I used the 15-minute time frame to establish the trend bias. So in this case, here we got a bear signal in the high time frame that establishes a bearish bias. And then if we go back in time here, we can see that that vertical line persists. So I'm only looking for bearish signals in between there, but since I'm on a cash account, I can't short sell. So I have to wait for the green one so I can trade to the upside. So in this case, yesterday, we got a bullish time frame signal for the overall trend bias in the 15-minute time frame here, and then after this green line, then I just traded a bull signal, just one time, obviously. On the 2-minute time frame, I got the signal, I entered, I put a stop loss down here, and yesterday I used a 1 to 1.5 because I was on the lower time frame. Today I was on the 3-minute time frame, so I used a 1 for 2. So in this case, we hit target, scaled out, and that was it. That was it. All right. So that was the easy 3% trade, my big 12-cent profit. Then I went over to BMR. And then on BMR, again yesterday, you can see we've got quite a few signals here, but yesterday I traded 3 times. So if I look here on the time frame, you can see that we had the bullish signal here. And then if we kick it over to here, sorry about all the scrolling. I wish it would just expand where my mouse was, but TradingView doesn't work that way. So after we had this green line, right, we're in a bullish trend bias on the higher time frame. All I did is look for bullish signals in the lower time frame. Entered, put a stop loss, took a target. This is a 1-to-2 ratio. Entered, put a stop loss, 1.5 times that range to the upside as a take profit. Entered, put a stop loss in place. That one stopped out. Or no, I'm sorry, that one didn't stop out. It wick dipped. I stayed in that one, walked the members through it in the chat channel, explained why I wasn't stopping out, and then locked in a profit there at 1 to 1.5. And then, of course, we got a bear signal on the higher time frame, so there's no more bullish trades for that day. And then we got another bull signal here, but I was already done for the day. So no trades there, but that would have been the other trade if I was in it, but I was not. So moving on. So you can see all 3 of those, 40% win, 28% win, and 19.69. That does not include the 4th one here, but again, that's just missed opportunity is okay, right? We don't really have to trade every single time. Then I traded DHAI. All right, same exact setup, right? Just 15-minute time frame. This one I got my butt kicked a little bit, so let me just zoom out here. All right, and this is why it's important to diversify your positions and use responsible position sizes. All right, so we got the bullish trend filter right here, and then I jumped in ahead of time. So I didn't wait for StocksBuddy to actually give me a signal on this one, and I lost 23.81%. So I deviated from my plan and paid the price. In this case, however, I followed my plan and still lost a 7.62%, but it was a much smaller loss, and that's okay. But again, I walked members through it, and this is because I was looking at the wrong time frame, so I just jumped in like a fool. Then we got the bearish signal, and it didn't recover, so no more trades for that one. Sorry. So both of those were losses. But again, this first one was completely unnecessary. It's just because I wasn't paying attention. Then for Wish. If I go ahead and come over here and look at Wish, you can see that we've got, again, high time frame bullish bias and then low time frame entry signals. So I had 5 trades here. First one here, I look for an entry, put a stop loss 1 to 2 or a little bit greater for the profit potential. Took profit there, moved on to the next trade, took a loss on this one. Right, just waited for a signal, put a stop loss right here where the line was, 1 to 1.5 risk reward. This one stopped out. This one here stopped out. Repeated this process a couple times. This one won, this one lost. So I had 3 losses, 2 wins, overall net profit. There we go. So 2 wins outweighed the 3 losses, and that's the way I like it. That's why I use those disproportionate risk rewards. So overall, I had 6 wins, $14.58 realized profits, which was a 102.18% exposure. 5 losses was $1.16 in the deficit, and overall I made a $13.42 realized profit for the day, which is 65.48% total exposure of profit potential as price range percentages. So sorry if that's a lot of words. So then today we watched DBGI, we watched ABBR, we watched a couple, but I only traded a few of these. So if we go ahead and look here, I only had 2 opportunities that I traded, and that's all I needed. Right, I hit both of them. So if we go over here, the 15-minute, go to the day, right? Same exact strategy. I just waited for a bullish signal in the high time frame. We got that pre-market. Then during market hours, I waited for a bull signal, right? And I entered, set my stop loss, and then I moved this stop loss up because I scaled out of the trade, so I wanted to reflect that. But on this walkthrough here, you can see I bought 2 shares at $7.55. And then I sold one at $9.78, and then I sold the second one at $12. So pretty good profits on that one right here. And you can see it went up to $12. And then we got a bear signal, which means I was waiting. We kind of walked through the sell-off here. And then I said I was going to wait for a bull signal. Kind of mistimed this one because I didn't get in quite on the close of the candle. So I got a slightly different average, but that's okay. I got in 2 shares at $7.57, so right around the same spot. And then like a fool, like a damn fool, instead of selling 2 shares, I actually bought 2 more to average down, which is okay, right? So again, I walked the members through that, but since I had 4 shares at that point, when the price came back up to 906, right, it stayed above my stop loss here. Well, actually, it wick dipped down here, and I did move this down to that wick, but I walked the members through exactly what my reasoning was for that, and it didn't break down below that until after right here. So easy enough trade. Went back up as soon as it broke above my break even. I sold 3 of the 4 shares at 906. It was a little bit higher for the profits, but I sold those at target, let 1 share run as a runner, and then I ended up selling that at 641, which is below my entry, or below that stop loss because the price pulled back down and I didn't want to exit it completely, right? The 2 potential outcomes here is the price went higher than this, and I could have sold that 1 share at a higher price, or it could have come back down here and I sold at that stop loss, which in this case is still a net profit because I sold for profit on 3 of the shares at more than 2 times the risk range of that last share. So it's disproportionately profitable. And that's it. That's all I did for that. And then for BGLC, this was the one that kept running and halting and running and halting, and it was a nightmare to trade. So I took it off the watch list shortly after this trade. So in this case, it's same exact thing, right? I got a bull signal here on the higher time frame. You guys probably can't see that. Let me draw a vertical line. We got a bullish signal here in the 15-minute, and that means during market hours, I'm just looking for the bull signals. Didn't grab the market open one because I was busy doing a bunch of stuff, but I did grab this one here, and this was kind of in the middle of a bunch of halts. So I entered, set my stop loss, set a 1 to 1.5 risk-reward ratio because this one was super high risk and it was halting all morning, so I didn't want to go too crazy. Obviously, if I did a higher risk reward on this, I would have profited, but I had no way of knowing that in the moment. So no reason to try to anticipate. It was high risk, so I wanted to reduce the position size as well as the risk range. So that's what I did. So we hit target. I ended up getting out of this one. I just bought the 1 share, or I'm sorry, I bought 5 shares. I'm sorry. So $10 worth basically. I sold 3 shares at target, and then the other 2 shares I sold just above my break even because the price came back down. It was like right here. It wasn't a very long trade. I should probably condense that drawing a little bit so it's more realistic. This is where I got in and out basically. So easy enough to trade. And this recap here for today, this reflects the raw cash on dollars invested profit. The price range profits I didn't include because I want to start being a little bit more accurate with those recaps. So this 44.24% net profit is the $6.68 total take-home cash profit on the $15.10 that I invested total for that trade. And then this $4.09 profit from the second trade on DBGI reflects a 13.86% profit on the $29.50 that I invested in that trade. And then the $1.45 on the risky BGLC one, $1.45 profit on $8.30 invested results in a net profit of 14.47% on those dollars and nothing else. So percent range price, those are much, much bigger percentages, but I wanted to be more accurate since I'm scaling out of these, and I want that to reflect the actual profits that I'm making, not just where the price went. So with all that said, this is the strategy I'm just going to use going forward, and I'm going to just record this for a couple of weeks probably. And I'm going to continue to walk members through it as I can in the Stock Chat channel. If you're not in premium, that's okay. The strategy just, again, you can do this on your own. It's not something you necessarily need me for. But I am doing it on this account consistently, and I want to do it on small amounts just so that it doesn't necessarily make or break the portfolio. So you can see here in this case yesterday, I made a total of $13.42 cash, which is about 0.5% of the portfolio. So it's not huge. And then here I made $4.45, and then I made $4.09. So we're up to about $19, $19.19 right there. And then another $1.45. So about $20-25, which again is about, 0.5% of the portfolio. So it's not huge, right? But this does put me on track to potentially make, 2 to 2.5% per week, which compounds very nicely for very little effort. So if this is something you want to try, you're more than welcome to, but you don't have to. I am going to end this recording though because it's 12 minutes long, and I don't want this to be a lecture about, StocksBuddy this, StocksBuddy that. So use any strategy you can, any strategy that makes sense. Find your edge and just do that consistently, and you'll have clean data that you can build on. It's either going to work for you or it's not, right? So just be responsible, and I will see you guys next time. Thank you all very much.